Hello, my name is Aaron Edwards, co-founder and market consultant of Santos Springs. We offer grain marketing solutions to producers in multiple countries. Welcome to our W2H grain marketing channel. Go ahead and hit the subscribe button. I also recommend tapping the bell so you get future notifications. And if you like what you see, hit the like and share this video with other farmers who care deeply about their grain marketing. If you are a corn or soybean farmer, your revenue depends not only on your production, but also the answer to three simple questions: when, how much, and how you sell. One W, when, two H's, how and how much. Our W2H mentorship provides a clear, concise, and custom approach to answering each one of these three questions for your specific farm throughout the year. Before we start this week's content, it's always important to remember that trading in futures products entails significant risk of loss, which must be understood prior to trading and may not be appropriate for all investors. This commentary and the information contained within should be considered market commentary and reflect the opinions of the author. For those of you watching this with a delay, if you are a U.S. corn or soybean farmer and want to stop being held hostage by market uncertainty, let us teach you how to place each one of your bushels in a grain marketing strategy specifically designed to optimize your farm's revenue. Click on the link and we'll work together to see if our W2H mentorship is the right next step for your grain marketing. Edition of our W2H market update. As we always do, right out of the chute, we got a lot of stuff to cover. We will cover that. It's election day, a lot going on, but I want to start out just like we always do. Is there action required this week? That's always the big question. And if there is, what should we do? And for this week, we'll talk about all of the pros and cons. We'll talk about all the details later, but no action required. So if you're busy, you don't have time to watch the video, I want to make sure that you get that out of the way up front. You want to, put in your headphones or turn it on in the car, listen to the rest of the report, great. If you have time, I recommend watching it. There's always valuable information. There's always important updates. Having said that, what really makes a difference financially is knowing when you need to take action, and this is not one of those weeks. So we'll jump into the content here before we get started. As we get started, and just wanted to, I guess this will be the public service announcement. I live in South Florida, got out early and voted. That's my wife. Trump's watch party will be about 20, 30 minutes from where we live. So we're definitely tuned into elections. I think that's what's on everyone's mind today, front and center. From a market standpoint, one thing that is interesting to me is this is the US dollar index. And I don't want to put too much weight on it, but I do think it is important for us to evaluate it just a little bit. I think this should be on the back burner. So as we think about this is the US dollar index. What this, the blue line that cuts across the screen, I'll see if let me mark it up here just so we can do that. Let's go ahead and grab green here. This blue line right here, get a stylus. There we go. And green. There we go. This blue line right here, this is the 200-day moving average. And this one right here, this is the 20-day moving average. Whenever you get this cross like this, where you have the 200-day and it cuts up like that, that's what's called a golden cross. If that were to happen from a technical standpoint, we could see this US dollar index just taking off. That is not what happened. So basically what's happening today, or what looks like it's happening today, is that right here, let me get this in red, right here, we failed to have a golden cross on the value of the US dollar. Now, this is a technical analysis on the day of an election. So again, this is just to monitor it. This is just kind of a placeholder, right? The biggest amount of news is who's going to win on the other side. There are some implications, though, that are worth noting. It seems to me, my impression, my read on it is that right around here, it was kind of looking like this would be Trump, and then Kamala gained some traction, and a lot of this dip was kind of when Harris got a little bit more traction, and then it seems like there kind of a little bit more consensus was built about a Trump victory, and we got that run up. Now it's on election day, and the market doesn't know what direction it wants to go. Now I don't want to, not making a political commentary, not trying to draw more out of that than it should, not trying to pick fights with anyone. I know that everyone has an opinion about this. What's interesting to me about this, and this is why it's noteworthy in my opinion, as we think about the strength of the dollar, if we do have a weakening dollar, that would help our exports, right? If the dollar is weak, that makes our what we export cheaper. So that is one thing that we should pay attention to. And then the other thing that it also impacts our competitors. So not only does it make our exports cheaper, but the Brazilian currency, I don't have a chart of it. Let me get this a little bit bigger so you can see me a little bit better. Our exports, the Brazilian, our competitors, whether it's Argentina or Brazil, right now they are getting more of their currency with a stronger dollar than they were a month ago. But if that thing tanks again, it not only makes us more competitive because we're cheaper, it also makes us relatively more competitive, is what I'm saying. So I just think it's important. I think it should be on your radar that there seems to be a relationship between government and the election today and the value of the dollar, and that can impact commodity prices. That just should be on your radar. That's not making more or less of it than what we should, but it should be on your radar. I think this will be the last week. I might pull it up next week. This will probably be the last week, though, that I pull up U.S. crop progress, just because basically we're done. Let me get the highlighter up here, if we can get the highlighter. So, and pull this over here on the side. There we go. We're not completely done, but we are practically done, right? This is the beans, and then conditions are good, but it's just, we're practically done with bean harvest. I don't know what's going on in your neck of the woods particularly, but, and then if we look over to corn, it's also good. That's soybeans. If we look at corn, same thing, right? It's practically done. We'll draw your attention to it here. Get it marked up. So still maybe got 10% to harvest. Got to bring it home still, but it's there's not really much of a story here. There we go. It's just close to being done. I might pull these charts up again next week, but it's a good crop in the U.S. It's done harvesting. That's not the headline anymore. That's not where the attention is. The 2 points of uncertainty, and if you read the comments, the 2 points of uncertainty that are getting to the market this week are government, which is election today, USDA report on Friday, and then South America, what's going on in South America. Those are the 2 points that do deserve a little bit more attention. So here's a picture from a customer in Western Paraná. I'll show you on a map in just a little bit where that is in Western Paraná. But you could see these are the very last beans they planted. These weren't the beans he was proud of. You can see there's a little weed pressure. But I said, hey, where are you developmentally? He's like, well, this is what the last beans planted looks like. So they're already up and out of the ground. Maybe not as good of a stand as the rest of their crop, but it's doing all right. And this is what I want to spend a little bit more time on, is looking at crop by crop, and then we're going to get a map. So this is Brazil planting progress. Right across the top, these 12 states represent 96% of soybean area in Brazil. I want to do a little bit of a color coordinated, for some of you this is a review, but a little bit of a color coordinated effort here. So these top 4 states, this is an expansion area. And I'll circle it on a map here. And the nickname is the first 2 letters of each of these states. So it's Mato Piba. That's the nickname of this expansion area. And you could tell, I'll circle this on red when we get to the map so you can see where it is. You could tell that these states, they are ahead of speed. If you look at just like last year, Bahia was 4%. This year they're 19. And then Maranhão was 8%. They're 8% again. Tocantins was 17% last year. They're 25. Piauí hadn't even started last year. They're 3%. And so it's these states are ahead. So the expansion area, they've planted faster, and that's partially what accounts for this down here. Last year they were 48% planted, and it was fast planting even faster this year, 53%. So planting in Brazil is very fast. It really sped up the last 2 weeks. So they were behind, got caught up last week, and have kept the lead by about 5 percentage points. 3 states deserve some added attention, and we'll do these a little bit separately. So this one is going to be Mato Grosso. We're going to do it all by itself because it accounts for about a quarter of Brazil's total production. It's a really big production state. And you can tell that they are 80% harvested. Here in green, we're going to do a couple of these other states. I'm going to lump a bunch together here, which might be that should have been green. Let's go back. I'm going to lump a bunch of these together, and maybe more than we should. We'll talk about it on a map, but we're going to go this whole middle section here. We're going to lump this all in green. And there are a couple of states here that deserve attention. First of all, we have over 70%. We have 3 of them. Paraná, that's where this state right here is the one that I just showed you the picture of, right? Paraná. São Paulo is almost done. They're not a huge producer, but they're almost done. And then Mato Grosso do Sul, those were the pictures from last week. I'll make this a little bit bigger just because we're getting it marked up pretty good. They're over 70%. And then you've got the 2 southernmost states. And we'll just, I guess we're running out of colors. It's kind of hard to see the yellow, but we'll just do the yellow here for these southern states. So let me try to remember. Expansion area is red, Mato Grosso is blue, middle of the country is green, and then we've got yellow. So let's look at a map, and I'll kind of circle those for you. Remember the colors we use. So the expansion area in Brazil, we did that in red. It's these 4 states that come together right here, but you can tell it's kind of this whole area that's important. And then there's also this, which is not part of those states, but this is the northern expansion area that I talk about. And it's very important. It's also interesting because it just keeps growing and growing and growing. And then there's the state of Mato Grosso. This is a single state, but it accounts for a quarter of everything that's produced in Brazil. Also produces a ton. Then in green, we did this whole middle of the country, which is basically here, down to here, and over to here. And that is, again, if you add all that up, that's 15, 10, 8, 5. I mean, that's a lot of the country, that whole middle of the country. And in southern Brazil, it's going to be a little hard to see, but it's this yellow. It's these 2 states. When I think about the production regions, this is kind of how I break it up in my mind. Now, I might lump some of these separately, but some of the states, southern Brazil tends to be a little bit more vulnerable from a weather standpoint. And what I mean by that isn't that you don't have crop failure in the north, but the variability of crop failure is a little bit different. So let's say Mato Grosso, oh my goodness, they're having a bad crop. It might go from 70, 80 bushel an acre beans to 50, 60 bushel an acre beans, right? Where in southern Brazil, oh, they're having a bad crop. It might go from 60 bushel beans to 15 bushel an acre beans, right? So it's like the amount that it can, very rarely do you get just absolute total failure in the middle of Brazil up. It's very rare. In southern Brazil, sometimes you do, either drought or flooding, or they have it's not a harsh winter by US standards, but they can get freezes. So they can have things that come in and wipe out a crop. That's very rare in northern Brazil. So when you look at national averages, it's important to know expansion area versus, the kind of the middle of the country versus southern Brazil, and where that weather hits can impact a lot of the crops. It's also important to realize that there has been somewhat of a shift. There's several ports here along the Amazon. Let me get a little bit bigger. We'll do that, and we'll do it in blue here. There's a northern expansion area, and it goes here. Basically, a lot of this area has started logistically going north to where about a third of Brazil's soybeans flow northward. And that's also something important to remember when we talk about like international basis levels and competition and exports. Where is this grain coming from, and how will that impact market? Don't want to get too distracted, but that's a good bird's eye view of planting in Brazil. Now let's get into the nitty gritty. If you're aware of the way that we market grain, the W2H method, when, how much, and how to sell, it's built on a portfolio. So we're going to put together a marketing plan that is specific for your operation. That's the base. That's the foundation. We're talking about each one of your bushels. Establish risk, objectives, timelines. What is the goal of that bushel? We've placed them in buckets. And then how do we execute on those buckets? Now that's where these weekly updates come in, and we're looking at seasonality, we're looking at funds, we're looking at technicals to help us just basically adjust those buckets, manage those portfolios. We've got in place in the portfolio, when is it time to sell, when is it time to tweak it, when is an adjustment required, and that takes us to action. I started off the video this week saying no action is required. So that's that. Let's take a look at markets. Let's just go over a little bit of what we're seeing in the markets and what to expect. Let's make this a little bit bigger. This is the net position of corn. So managed money with corn speculators. And let's get this up to the top. That'll be a little easier to use. Maybe make that red. So the first thing is there hasn't been a single time this year that the speculators have been positive. They're always in the negative camp. I don't remember the last time that happened. I was trying to look back. I could go crunch numbers and figure out when it was. It is very, very rare for the spec funds to only have a sold position the entire year. Whenever this number is below zero, the way I think about it is the price in Chicago is artificially low. What I mean by that is if you take the speculators out of the market, the price would rise. The flip side of that is we had the speculators overbought for back half, the back third of 2020 all the way through most of 2023, or a lot of 2023, we had them bought. So the market gives and the market takes away, but that's important to recognize. We had kind of maxed out the lows here in mid-July. Gradually, they've been stair-stepping, reducing their position, stair-stepping up, a little bit down, and then they've established here, we'll go back and look at it, but the net sold position of corn speculators is the smallest. It may have been the smallest. I'd have to go back and check. I think we might have hit the smallest net sold position of corn the entire year. And it's for sure on the podium, which means speculators in Chicago are the least convinced that they should be selling corn that they have been all of 2024. The smallest net sold position, or at least on the podium of it. So that is notable. And if you look at just the change between here and here, this is a pretty significant reduction to their net sold position. I would place spec funds in the category of neutral. So they're technically sold, but they're neutral, right? This I would classify as neutral. And what have we seen? I mean, the heartbreaking news, the sad news is, okay, if this is the new fair price for corn, this is not a very exciting price. Let's get this in black. If this right here is speculators outside of the market, then that's pretty sad, because if they go back to selling it, this thing has a long ways down. And if they buy it, we still probably won't make it all the way up to those good price levels. So I guess the bad news is they're net neutral, but the price of corn is still a little disheartening. That's the bad news if we want to think about it that way. There we go. The good news from corn, in my opinion, is that we have not taken out the lows from late August. We tried here in mid-October, could not do it. We tried again. And the real good news, I'll even highlight this. We'll get this in blue. Actually make it yellow there. We're in an uptrend. Whenever we're above the 20-day moving average, we're in an uptrend. What are the resistance points? What am I looking at? And when will maybe we look at taking some action? This is the March. Look up here. This is March corn. When are we going to maybe, I said, hey, Aaron, no actions required. Third week in a row, I'm saying no actions required. When are we going to take action? This is the first level. If you look at the March, the exact price varies, but on March, it's at 450. We failed last time we got up there. That's somewhere where we might want to be looking at taking action. Also, this 20-day mover is coming down. So from a technical standpoint, around 450, this is a price level that we should be watching, in my opinion, from a technical standpoint. Hopefully that isn't the high of the year. Hopefully we get more of a recovery than that. But we can't only wait for the high tick all year long. So we are in an uptrend. That's good news. I don't think 450 or close to 450 on the March contract. The numbers vary contract by contract. I don't think that's beyond impossible. Getting close to that, I don't think that's beyond impossible. It's also important to remember that we have a USDA report this week. So what will happen to markets this week? My experience with USDA report is that they typically hover around the 20-day mover, and that would probably flatten out. If we stay above it, that'll flatten out. I expect basically sideways trade. If this market really takes it on the chin, last time this was as low as we got, and the time before that, that was as low as we got. I think we would have to have something very bearish to knock 20 cents off of this. My opinion is we would have to have some pretty bearish news to knock 20 cents off this market. And if we don't get that bearish report, if nothing's all that bearish, I would guess that we would chop sideways to up until we either get over in here somewhere. And it would not surprise me very much at all if between now and Thanksgiving or close to Thanksgiving, there's not a shot at us sometime in there selling some corn close to 450. That wouldn't. No one has a crystal ball, right? That's the hazard of doing what I do. But I don't see a reason for action, and I think it's not beyond the realm of possibility that this market climbs up somewhere between now and Thanksgiving, and we get a shot closer to 450 corn. All right, now we're looking similar thing, but we'll look at the bean market. This is the net position of funds for the bean market. And it's a very similar story. Let's get the blue on here. Actually, we'll do the red again. Yeah, they got closer to neutral in May, peaked out in mid-July. They have not had a single bought position all year. You can look over here. They've not been bought at all. The difference, though, is on the bean market, corn kind of did this little dip here, and then beans, corn already started turning back up and came up to its smallest net neutral. Beans are really struggling. I mean, there's a lot of pressure out of South America. So I think it was the last 2 weeks I said the worst nightmare is that this thing just gets sold off, and this is not very reassuring. So the position of speculators are still selling beans. That's concerning. There's no way to sugarcoat that. I'm worried about that. That is concerning. That's something that we need to watch. Having said that, corn and beans typically move in tandem. And if we look at the bean position, Are beans pulling corn down, or is corn pulling beans up? They don't have to move in tandem, but a lot of times they do. And we're actually having, knock on wood, we need to get a close, right? But this is the third session in a row that we've traded above the 20-day mover. And it's looking, if the markets, it's looking like we might get a trade above the 20-day mover. This is the January contract. So it varies contract by contract. But on most of the contracts, we are getting what looks to be like a close, or very likely a close above the 20-day mover. Again, I am not super optimistic, but as we flatten this out, which would be the natural thing between now and the USDA report, I would expect beans to be somewhat sideways. And if we can stay in an uptrend, maybe they do climb up. The first resistance level on the January contract would be around 1080, and then for the beans, this 20-day mover is coming down. I don't think somewhere between 1080 and 11 is beyond the realm of possibility. This is not by any stretch of the imagination a bullish fundamental scenario. I'm not at all saying that, hey, this thing's bullish, hold your horses, we're going into auction style, this is bean market's going to take off. That being said, markets need to move enough to make grain trade hands. Farmers have sold what they're going to sell at harvest. Brazil planting's moving forward. What would it take for us to get another 80 cents out of this bean market? Well, the one thing is the dollar, right? The dollar, if that dollar comes down, pressure from selling in Brazil very likely will ease up. That's one thing. Another thing, the crop in Brazil isn't made. It's halfway planted. It's not made, right? They're half the way done planting it. If you start taking that off, the third point that I would point out, and I don't have a chart for it today, but basis for exports on both corn and beans is strong. The domestic basis is stronger for beans than for corn. So if you're relying on ethanol plants or soybean crushing facilities, you're probably not very excited about basis. But the export basis is kind of okay. And what will happen is let's say that the dollar does come down and our exports get even more competitive, and we already have a friendly basis, it wouldn't take too much for us to start getting some more basis pressure from the export market. Then if you're a crushing facility, whether it's soybean processing or ethanol for corn or whatever, if you need grain, then you might say, hey, I got to pay a little bit more than the speculators for the corn market. They're already almost neutral. For the bean market, they might be like, oh my goodness, I'm on the wrong side. Put together 10 days of dry weather in Brazil. It's not beyond the realm of possibility, in my opinion, that we could get a little uptick in the bean market and the corn market. That's the main thing that I had. We have a couple of questions to go over, and you can always feel free to send in your questions. And let's go for it. Okay, we'll answer a few questions. Let me get it to the big screen. There we go. Answer a few questions, and that's it. Are we going to have beans with a 7 in front of them when Brazil harvest arrives? Are we going to have beans with a 7 in front of them when Brazil harvest arrives? I think that's people's worst nightmare, right? I think we have a tendency to feel like the world will not change. So what have we known from the bean market? Well, if we go back, if we rewind 12 months, we had $14 beans in November. Now we have $10 beans, so we lost $4. Oh, Aaron said it might go to 11. All right, lose $4 from a little rally to 11, you're down to $7. Or lose a 7 in front of them could be $7.99 or whatever. So I think our fear is that the price drop that we have seen from last November to this November of going from 14 to 10, that is going to repeat. I think that's our fear. It would be unusual, in my opinion, to have back-to-back years of 40% drops in prices. It drops 40%, and there are, maybe not, maybe 30 some, but you lose a third of the value, then a third of the value again. That would be unusual. it's not, markets are tricky, right? Is that possible? Yes. I don't think that's personally, I don't think that's very likely. For me, I do think it's important for us to characterize bullish versus bearish. And I'll tell you the way that I handle that. And this is from analyzing data, not just like a gut feeling, right? So I'm not saying I could prove it scientifically or statistically. When you have a true bullish environment, what happens is you go into auction style, who gives me more, because there is not enough grain to go around. And there's really no way to know when that thing's going to stop. It's just who pays more. It's like euphoria. Nobody knows where that thing's going to stop. So you sell on the way up. You're gonna sell a little too soon. You're gonna sell too late. All your sales are gonna kind of be okay, right? It's kind of chaotic and it goes way up and it's a lot of volatility. A true bullish market, when there is concern about not being enough grain, you go into auction style, who gives me more, and markets go berserk and speculators buy in. We aren't in that environment. There is enough grain to go around. But when there is enough grain to go around, it's not the opposite. It's not like a race to the bottom. What happens is you eventually establish some type of floor or base level where buyers know they can make their businesses run. And then you typically have some type of a ceiling where sellers know they can make their businesses run. And you kind of have these range bound. Sure, yeah, there's some dry weather in the spring and you get a little bit of a tick up, but it comes down pretty quick. Or there's some real bearish headline and something really bad, and you get a little bit, but it spends a lot of the time within kind of this contained range. So my opinion isn't we've lost $4, we're going to lose another $4. That's not how I see these markets. Is it possible? Yeah, of course it's possible. But I think it's more likely that it's plummeted. We are very likely U.S. harvest, I would hope, that those August lows, we're going to look back on them and say, you know what, this is kind of under $4 on corn, under $10 on beans. Farmers kind of get tired. They're not too excited to sell it. And buyers are like, I can make these numbers work, so I'm going to go ahead and scoop some up. It seems to me like we may be establishing a year or two in the future when we look back at the charts and we look back at the history, even next harvest, it wouldn't surprise me if what we're saying is, yeah, whenever corn drops below $4 on the board of trade, you kind of get some buyers, and it seems like it doesn't stay there too long. Or same thing, whenever beans drop below $10, kind of get some buyers, which is a higher price floor than we had before COVID, before 2020, or before the trade war. So my bias is we've kind of established a higher floor. We don't really know what the ceiling is. And if I were to just project out, I would say very likely whatever the spring high is from this upcoming spring, I think that'll probably set in some type of longer term ceiling. So I don't really see us having $7 or $7.90 corn or $8 corn in the Brazilian harvest. Now, it wouldn't surprise me very much at all if it doesn't trade back down to whatever the August lows were. So we get some type of rally, a little uncertainty. And then once we kind of know that crop in South America is okay, they're like, yeah, there's going to be plenty of soybeans. So, hey, we traded back up to 11.50. Maybe we took a run at 12. Who knows? We can dream, right? Maybe we make a run a little higher. But then whatever that is, it settles back down and trades under. So what's less clear to me is this new trading range, is it like 10 to 12? Is it 10 to 11? Is 10 really the floor? But my bias is probably every time that we've seen beans under $10, you kind of get some buyers. And I don't really see a reason why that would change. What will likely change is they'll take that out of the basis in South America. So if you're looking at cash prices in South America, that's a different thing because they'll take it out of the basis. What do you think is the upside of the corn market? I guess that's kind of what we were talking about. I used bean numbers. When will farmers in the U.S. be willing to sell? And I know, I mean, I remember years and years of farmers saying, I'm not selling until it gets to $5 or whatever. So is $5, is that new, you know, silver lining goal? Maybe. I think that there's a chance that we get the close to $5. I think it's going to be really hard to get close to $5 or over $5. I think upper fours, we'd probably run into selling pressure. And we got one more question. Is rain forecasted for South America this week? Yes. Basically, all major production regions, there is rain forecasted for South America. So that's not good. I mean, there's the headlines that we have for this week is planting in Brazil is ahead of pace. No real story out of South America. Rain forecasted. Elections today. USDA report on Friday. We are in an uptrend, so fundamentals are bearish. The economic factors like the dollar or inflation or who wins the election, maybe we get that's a factor this week. Maybe we get some news from the USDA report. I don't expect it to be a major shift. The good news is markets are in an uptrend. So as we kind of look at all of the factors, that's what we have going for us. So again, no action required from a selling standpoint. If we get a friendly week and if we're punching up against those resistance levels by next week, I think that very likely it will be time to take a little bit of action. So we'll see what happens with the election today, see what happens with the USDA report, and we will check in next week to see if it's time to be getting a little bit of work done. Have a great week.